Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I wanted to follow up on a couple of ideas that I had shared with IWM and one other idea that we're looking at as we get in towards the end of the year. So when I look at IWM, and essentially when I look at any chart, first and foremost, it's hard for me to look at a chart without the squeeze anymore, and the second thing is it's hard for me to look at a chart without thinking about where we stand in relationship to the 21 EMA. Regardless of how strong emotions get or how extended a market can become, time and time again, you see that you reach these highs, revert back to the 21. Reach extreme lows, revert back to the 21. And that's a lot of what I feel we have going on up here at these levels. So, shared some ideas yesterday on how I was thinking of playing it back down into 117, and as we get into today's session, they just weren't really making it easy. Now, I'm a fan of using the futures markets to tie into your ETF ideas, and on the hourly chart you can see the squeeze that we had developing down here in the bottom part of your screen. This will likely be the signal that drives the next part of these markets, and as it worked out, it showed up a little bit cleaner in the S&P futures. Now you can tie these together, and try to use one to lead to the other. What I try to do is find the one that is setting up the cleanest. So when we came in and looked at the S&Ps today, you can see where we gapped open to begin our day there at that 2164 and had a very good area of resistance. As that started to fail and triggered off of the 15-minute chart, that's where I started adding, or began initiating my position in IWM. But of the two that I shared yesterday, which do you want to try and initiate as the underlying is going lower? Well, in this type of spot, I like using the butterfly that is created using those put options, because the unbalanced butterfly will actually be a little bit better entry and more forgiving when the underlying is going bid. So knowing that I wanted to try and combine those two strategies, I put on the put butterfly when it's moving lower because those prices are more forgiving, and then if the underlying rallied against me, that's where I would look to add the unbalanced butterfly. So just a couple of ways to think about the two of those. At the moment, I only have the put-based butterfly into next week, and we'll look for a drop down there into, essentially what I'm really basing it off of is IWM, the ETF, and that would take us back down to 117. So keep an eye peeled for that. And then the other market, something I haven't covered in some time, is here with the euro. Now the euro closed down on its lows, so this is a tough spot for me to want to get short this, and I didn't initiate any position into the end of the day. But what makes this most interesting to me is the pattern that you're seeing on the weekly chart. This squeeze in relationship to what we have seen before. So here was our previous squeeze. You can see that the price patterns are still showing a pattern of lower lows and lower highs. So in regards to that, I think this will be something that will fire short and something that you may be able to entertain some put options with into the end of the year. So a fresh idea, a follow-up on an idea that I'm going to be tracking into next week. And then the last thing, letting you guys know that we have a fresh webinar with John on Thursday, July 21st from 6 to 8 Central. John has had a few days off, and as much as I enjoy getting to talk to him all the time, whenever he comes back from something like this, I think there's a certain amount of clarity that comes from, being out by the ocean or maybe taking a day or two off from trading, and the clarity that comes with that, not to mention just the edge that he brings to trading in general, is something that I've always found extremely beneficial, and we'll really be focusing on that on Thursday. So he'll have a fresh webinar kind of geared around the couple of ways that he enjoys trading earnings as we get into the next quarter of earnings. Obviously that will be very much in play, and if that's something that interests you, you'll be able to sign up for that for free at the end of this video. So I hope that helps. I hope to see you at the free webinar. You guys have a great weekend, and I will talk to you soon.